Walmart's earnings are out, Amazon has officially taken the top revenue spot, and consumers are clearly hunting for value. The retail pecking order may be shifting. Joining us now to make sense of it all and to tell us which stocks are poised to come out on top is Arun Sundarham, SVP Equity Research, CFRA. Arun, great to have you here.
Thanks for having me.
So Arun, give us the cliff notes here. What did we learn from Walmart this morning?
Yeah, I mean, it's a bit of the same old. Walmart is moving with really strong momentum. They had a really strong holiday quarter, capped off a really solid 2025, and they have significant momentum heading into 2026. All three of their business segments, Walmart US, Walmart International, and Sam's Club, is doing well. The company did guide a little bit conservatively for their outlook for the upcoming year, but that's not a surprise to us at all. Walmart typically guides conservatively at the beginning of the year, but what you historically see is as the year progresses, usually they raise their outlook. That's what they did last year, and I think they'll probably do that again this year.
Okay, could be why it initially looked like we were going to see actually no, Walmart shares have been both higher and lower. Notice that they just erased some of the gains that we had seen a little bit ago, but we look at Walmart really as a bellwether for the US economy. So what is the state of the consumer right now?
Yeah, we really have a bifurcated consumer. There's on one end, you have the higher income households who are experiencing wealth effects from high stock market the high stock market, as well as high house prices. And then you have the other side with the lower to middle income households, which are struggling a little bit more, and they're the ones that are really trying to stretch their wallet. But for Walmart, they're winning in both aisles. They're more higher income households are shopping at Walmart. They're subscribing to Walmart subscription program, Walmart Plus, which is really tailored to that higher income household. And then a lot of the lower and middle income households are also shopping more at Walmart as they increasingly focus on value. So I think that's why the company is really firing on all cylinders right now, is because they really kind of meet all customer demographics.
But nothing new there, right? We know that the lower income consumer has been choiceful and struggling for quite some time. We know that they've been getting more higher income people into their stores. Has anything changed?
No, I think what maybe changed last year, or at least towards the end of last year, was that gap kind of widened, where you saw more and more spending really lifted by the higher income household, and then a bit of a pullback from that lower income household. And we saw that throughout most retail earnings so far. It's that bifurcation between the higher income household and lower income household. But like I said, Walmart really kind of competes on all areas, and they have products and services tailored to all demographics.
Walmart is leaning hard into AI-driven shopping, letting AI do it for you, what they're calling agentic commerce. Do you think that improves loyalty and margins, or do you look at that as something that could reduce that impulse buying and hurt basket size if people aren't browsing the aisles and they're letting AI shop for them?
Yeah. I think for Walmart, I think overall Walmart will be a net beneficiary of AI, and they can potentially be a rather large beneficiary of AI. And it's because they're using it both in the front end and the back end. Front end, more, they're integrating their product assortment with companies like OpenAI and ChatGPT. That can enhance, product discoverability. And then on the back end, they're incorporating AI throughout their entire supply chain, whether it's robotics and automation, or even in inventory management, things like that. So I think it can benefit the top line. It can also benefit margins for Walmart. And we're still very, very early days in AI right now. And I think one of the reasons I think the stock has run up this year so far is because investors have really tried to figure out who are going to be the winners and losers in AI. And I think big box retailers, Walmart, Amazon, these big retailers, I think will eventually be big beneficiaries of AI, because two of the biggest costs for retailers are labor and inventory. And I think both of those areas are AI can potentially help reduce costs in both those areas.
You mentioned Walmart and Amazon. What about Target? Because it's technically outperformed Walmart so far this year. Obviously, the one-year chart tells a very different story. But is Target poised to benefit from AI as well?
Yeah, I do believe so. I think these general merchandise retailers will be the biggest beneficiaries of AI and agentic AI. And I say that because half the problem for a lot of these retailers is for customers even discovering their product. And when you're a general merchandise retailer or a discretionary retailer, it's really hard to match the right product with customers. And so now with AI, in theory, discoverability will be easier, and you'll be able to better discover a lot of these general merchandise products. And Target is a more of a discretionary retailer than Walmart. Walmart is predominantly a grocery retailer. So that's why I think you know discretionary retailers like Target, Etsy, eBay, they're more discretionary general merchandise retailers, and I think they'll be big beneficiaries of agentic commerce.
Arun, you've said in the past that investors are putting names like Walmart, Costco, Amazon in one bucket and everything else in a slower growth bucket. Who's most at risk of falling behind this year?
Yeah, I think a lot of these specialty retailers, unfortunately, a lot of smaller retailers and specialty retailers are at more risk. Think like, if you just take home furnishing for example as a category. A lot of furniture retailers have either declared bankruptcy over the last few years or on the verge of declaring bankruptcy, and that's resulted in share gains for like companies like Walmart, Costco, Amazon as well. And unfortunately, is these specialty retailers or smaller retailers that are also more at risk for or more exposed to cost pressures like tariffs, for example. These bigger retailers have, I thought, done a tremendous job over the last year in managing tariffs and ultimately not passing too much of that tariff burden to consumers. But it's the specialty retailers or the smaller retailers that either had to absorb more of the tariff costs or had to increase prices for their customers, and that's resulted in some share losses as well.
Well, let's talk tariffs. Are higher prices coming, or have retailers just figured out how to manage that risk and it's a thing of the past?
Yeah, I mean, tariff was certainly the big headline in 2025. I don't think that 2026 will see as much of a tariff burden as it did last year. And like I said, I think retailers have done a tremendous job over the past year in managing tariffs. So in terms of in the perspective of a consumer, I'm more positive that inflation will be relatively low this year. You have to remember this year is also a midterm year, so the administration wants to do everything that they can to improve affordability for consumers. So I think tariff pressures will probably lessen or alleviate this year instead of escalating. And so that would be a positive for many of these discretionary focused retailers.
Okay, I also wanted to ask you, at the top, I did mention that Amazon surpassed Walmart's annual revenue for the first time, making it the retail king, I guess, if you will. Does that actually change the competitive landscape, or is that just more symbolic at this point?
Yeah, it's a cool headline, I think, but it's really not an apples to apples comparison between Amazon and Walmart. It's really apples to oranges, especially given that Amazon has that humongous and fast growing cloud business. But yeah, we knew it was going to happen eventually, and it seems like this past year was the first year where Amazon officially overtook Walmart, and I don't think that will change anytime soon because Amazon's growing much faster than Walmart is.
Okay, there's been a lot of talk about the GLP-1 effect. I think previously it was how it's going to impact retailers in terms of the snack companies because people aren't eating as much. And now it's that shoppers have to buy new clothes because they're losing weight. Is that real? Is it actually showing up in the data, or is that just noise at this point?
Yeah, I think it's probably a little bit more of noise at this point because we're not really seeing it in the results just yet. I cover all kinds of retailers. I even cover packaged food companies. And a lot of these packaged food companies, their sales are just not growing. And the question every single quarter is it because of GLP-1 drugs? And most of the executives say, no, it's because of higher prices. And it's also because consumers are just generally shifting and buying more healthier, less processed foods, which is a separate topic. But certainly, it's something that we need to keep an eye on. GLP-1 adoption is still relatively low in the U.S., but it's going to likely increase, especially this year. I think there's going to be some pill forms of GLP-1 drugs being released. So potentially adoption will increase. That could result in lower food consumption, especially snacking categories. Could also benefit other categories like apparel, for example. But we have yet to really see that in the data. Right now, it's more of just like a headline.
Okay. Because you do cover so many retailers, I'm curious what your top retail stock picks for 2026 are.
Yeah, so it's similar to 2025, where our top three picks. Number one is Amazon. We have a strong buy rating on Amazon. Number two, I would probably put it's Costco now. We have a buy rating on Costco, and then number three is Walmart. I would say last year we had Amazon first, then Walmart, then Costco. But this year, because of the run up we've seen in Walmart shares. We are liking Costco a little bit more relative to Walmart.
Okay, that's a great segue into our rapid fire this or that segment. Are you ready to play with us, Arun?
Yeah, let's do it.
All right, here we go. Walmart after earnings, buy, hold, or sell?
Buy.
Walmart or Amazon?
Ooh, Amazon.
Walmart or Target?
Walmart.
Walmart or Costco?
Costco today. Yeah, last year, Walmart.
Off-price resilience, Dollar General or TJ Maxx?
Ooh, TJ Maxx.
Safer bet for 2026, consumer discretionary or consumer staples?
Ooh, I still like consumer discretionary.
Bigger driver in 2026, luxury shoppers or value shoppers?
Value shoppers.
More resilient discretionary category, jewelry or apparel?
Ooh, I would say apparel.
Consumer right now, stressed but spending or actually pulling back?
Definitely stressed, but spending.
Biggest threat to retail margins, inflation or tariffs?
They kind of go hand in hand, but probably inflation.
Better staples play, General Mills or J.M. Smucker?
Ooh, J.M. Schmucker.
J.M. or Kraft Heinz?
J.M.
Safest retail stock to own right now that isn't Walmart, Amazon, or Costco?
I like Etsy.
Okay. One retailer you'd feel comfortable buying ahead of earnings?
Costco.
One you'd avoid?
Dollar Tree.
Okay, we've got about 60 seconds left, so I'm going to name a stock, Arun. You give me a one-word rating, buy, hold, or sell, and then the 10-second why. You ready?
Okay. Yep.
Want to go back to Etsy?
Buy. They are just starting to grow their total sales.
Dollar Tree?
Sell. Most exposed to tariffs and competitive pressures.
Dollar General?
Hold. Like them relative to Dollar Tree, but still see competitive pressures.
Wayfair?
Ooh, buy. Stock has come down meaningfully over the last month.
Yeah, including today, down more than 10% right now. Target?
Buy, but a higher risk play, but we see value in the shares relative to its peers.
Chewy?
Buy. One of the fast growing pet retailers, and they're also growing their profitability and margins and free cash flow.
All right, we'll leave it there. Arun, thanks so much for playing along. Really appreciate it, and thanks for sharing your insights.
Yeah, thanks so much.